Hey there, it's Mike Wise with your weekly mortgage update. And this week, again, mortgage rates are up. 7.5% is the average rate on a 30-year fixed rate right now. In a nutshell, the economy is still growing. The GDP numbers came out. It's growing at a slower pace than anticipated, but it's still growing. And inflation is still a problem. It is still very sticky. It is keeping the rates higher. It's keeping the Fed from lowering the Fed funds rate. And as I'm recording this on Thursday afternoon. So Friday, the Personal Consumption Expenditure is going to be released, which is the Fed's favorite measure of inflation. It's basically what you and I are spending on goods each month. And I don't think we're going to have a huge movement in that number. But if we do see those numbers come down significantly lower than expected, then you might see some improvements in the interest rates. Year over year, the number that we're looking at is supposed to be right at 2.7%. So that's where the year over year number is going to come in at, or expected to come in at. So if it comes below that, then we might see some improved rates at that point in time. Another subject here, new home sales, they were up 8%. This is new homes. So the median sales price on those homes was $430,700, which was a little bit lower than expected, but the average sales price is $524,800. So what does this mean? Well, if you go back to your math days, the median is kind of the middle of where all the sales are, and the average is all of them combined divided by the total number of sales. So what does this mean? The moral of the story is that more lower priced homes sold in March versus higher priced homes. So that's all it means. The higher priced market is slowed down a little bit in the month of March. Obviously, these are national numbers. Here in California, the numbers are much, much higher than that. So new home sales supply is at 8.3 months, which is a little bit higher. You can compare this to an all-time high of 12.2 months of supply in January of 2009, and the all-time low was 3.3 months in August of 2020. That's when the houses, they were just kind of rolling off. You couldn't even get them listed, and they were sold. Last thing I want to talk about was build to rent. So you're going to see this number out there in the media. It is up 307%. What does this mean? Well, these are larger institutional buyers that are buying up real estate, and their intent is to buy this real estate, fix it up, to rent it out. And which that is good news. It's happening in some of the big cities and all over the country. The bad news is that this is a less of supply for the first-time home buyers, making it harder for them to buy houses. In addition to that, it actually moves the values up a little bit higher of all of real estate. So that's an inflation number, and so that keeps the inflation going higher. So hope this was a good update for you. If you have any questions or need any information, please let me know. I will be available this weekend. Have a great one, and we'll see you next week.